And Emily, I want to get to those big tech earnings that I talked about at the top of the show. First, Amazon announced record revenue, but disappointed on profits as those coronavirus-related costs, such as employee testing and higher wages, added pressure. And also Apple holding off on providing guidance, something we haven't seen from Apple in nearly 20 years. Break down these reports for us.
Well, that lack of visibility from Apple and not providing a 2020 outlook is something that really rocked Wall Street. Typically, Apple is able to provide pretty good guidance in terms of where it's going to land for the full year and for coming quarters. Looking at this fiscal second quarter, we had Apple sales growth slow down considerably. While it did rise over last year, that margin of growth was just about 1%. And then looking at that all-important iPhone revenue, it was actually off 7% to $29 billion in the second quarter over last year. Also want to note that Tim Cook said that foot traffic to its retail stores in China haven't yet returned to pre-pandemic levels. So that's giving a bit of a harbinger of what consumers can expect as the US and other nations outside of China contend with the coronavirus pandemic continually. The bright spot here was the services side for Apple. They said their digital content services like Apple TV Plus and Music will remain strong, but they're expecting their Apple Care warranty business and revenue from advertising deals to dip yet again in the coming quarters, just due to some of this demand destruction from the pandemic. Turning to Amazon, we also saw first quarter sales rise over last year. It also topped expectations, but we saw pressure on the margin side, and that profitability actually came in below expectations and below levels of last year. And that was because of higher costs, because of the hiring that they were doing to keep up with consumer demand during the pandemic and as people turned to the e-commerce giant. And also, of course, because of the spending that they're doing on just redirecting some of their products overall to shipping essentials and making sure that those get out to meet demand. They said that for the second quarter, they're expecting to have $4 billion in costs related to COVID-19. So that's something that could potentially see operating income turn negative. Again, we do have Amazon shares also lower in pre-market trading. Alexis?
All right, Emily McCormick, thanks for that.